It's loading. It's loading. You're live. Okay. That was weird. I had technical difficulties on YouTube, but we're good now. We're up and running. Welcome back, everybody. It is another Tuesday, and it is another matter or life or death. I'm your host, Josue, and here we are, August 11th. Second August, no, second August, second Tuesday of August. Um, Hope everybody's summer is going great. Hope everybody's enjoying their time. Hope everybody's safe. There was a tornado today, and I've seen a lot of people get like stuff basically evacuated. Mm. Also, prayers go out to my neighboring country, Colombia. If you guys weren't aware, I'm from Ecuador, so neighboring country is Colombia, and they had a pretty bad tornado there not too long ago. I want to say either yesterday or the day before yesterday, something like that. So prayers goes out to all of them. I wish there was like a link. See, when something happens here, there's always like in the United States, there's always like a link. There's always like a what was it they did for Katrina? They open up the phone lines. There's always like a phone number or something to donate to. Being that Colombia's in a whole other continent, then it gets a little bit tougher. But with that being said, prayers go a long way. Anyways, welcome back. Another episode of It's a Matter of Life or Death. Again, I'm your host, Josue. Some things to remind you of. I will be at the Elgin Tick this Saturday. There's also another event for veterans in Woodstock that some of my colleagues are going to be at. Bunch of outreach events this month going on. So keep that in mind. We also have our own fundraiser coming up September 12th, which is our 5K Run for Your Money. I love that tag phrase. Come join us. The flyer is posted up on our Facebook. It's pinned. Go ahead and register. I'm going to be running. I'm also going to be helping set up, helping tear down, and I'm also going to be taking pictures. So it's definitely going to be something good for the community and for the organization and for us. So, okay. With that being said, I won't take much of your time today because I do have a workshop to attend to this afternoon, so I have to get going pretty soon. But those are only things I had to remind you of. Oh, I almost forgot. The 5K is going to be emceed. 5K is going to be emceed by our one and only board member that's also a radio host, Joe Cicero. If you guys don't know, he is from, I forgot I have it written here. Or I don't have it written here. He is from, I give you the radio station. He's a radio host. Isn't that so awesome? Like, we're going to have an MC who's a radio host. 105.5, the Star. Yeah, see? I almost remember. Yeah, I knew it was 105, but I don't know what the 0.5. 105.5, the Star. Joe Cicero, again, radio star, celebrity. If you guys know who it is, pull up. If you guys don't know who it is, still pull up. That way you can meet him and you'll be like, right, I got to meet a celebrity. I got to meet a radio host. Like, that's so pretty cool. Okay, so without further ado, let's get right back into it. If you guys aren't familiar, like the title says, this month we're talking about pre-purchasing. See, pre-purchasing is such an important topic for us because a lot of people, since we are a not-for-profit organization and we do our counseling sessions at no cost, no obligation to you guys. That's important. I always like saying the no obligation because we're giving you guys the recipe. We're giving you guys the tools. We're giving you guys everything at your disposal to be financially successful and financially stable, but it's ultimately up to you to handle those tools correctly and, follow your budget and so on and so on. So because we do that, because we are a not-for-profit, a lot of people come to us. And one of the main things, because again, our counselors will tailor your budget to your financial goals. And if your financial goal is to own a house, then you're going to come to us with like, hey, I want to get into a house within the next year or two. So before we do that, there is a framework that we do ask you to fill out just to see how ready you are in the house buying process, because a lot goes into the house buying process, a lot more than what people think. Actually, a lot more people think it's just, going, getting a loan, and then seeing what you get approved for, and then just go house shopping, which is part of the deal. Yes, it's part of the process, but that's not all, because your finances have to be in order before you get into a residence, because we don't want you to get into a residence not being able to pay it, and then a month later, then you're struggling to keep your finances afloat, and then in a month later, you're like, well, I got into a house and I got kicked out. Like, what's going on here? Or I got into a house and I can't afford it. What's going on here? It's because you didn't take your finances seriously, and you probably weren't set up for success. So with that being said, we're gonna definitely be taking a look at that today. Okay, one thing I wanted to say is last week we talked about assessing readiness and financial preparation, because again, a lot of people may not know how much you need going into a house. You're gonna need to have some savings ready, because there's gonna be some down payments that you may have to do. There's also gonna be some inspections you may have to do, some earnest money you're gonna have to put down. We talked about that in the last week's video. You can go check it out on Facebook or our YouTube page. Both of them are there. A quick reminder on that, a little side note, is if you're trying to watch videos from beforehand, like our reverse mortgages videos or our mortgages on debt management programs or scams, how to stay protected from scams, those are going to be on our YouTube page, because they stay there for a little bit longer than what Facebook allows us to. So Facebook only lets us keep the live videos for a month. YouTube lets us keep them indefinitely. So go check them out. They're pretty fun. You're going to see me struggle on some of them, because I was pretty sick on some of them. But that's just the nature of the beast, Okay, so that's what we talked about last week. This week, we're going to talk about getting pre-approved and loan options, because, again, you're not even going to get into the house shopping until like the open. Well, you could go to open houses at any time. They're open houses. So get your little feet wet, go into an open house, see how it is, see if you like it. A lot of people won't even like that, But keep that in mind. Okay. Pre-approval, that's what's getting you pre-approved. That's what's giving you an idea of what you could afford, and then getting your loan options. So understanding mortgage types is important, because those are your loan options. We always talk about you going to shopping around and looking through multiple lenders, because there's different loan options for you out there, and what you qualify for is basically mainly based on the amount of money that you could put down. That's why I told you last week we talked about financial readiness, because you got to be financially ready to take on a residence. If you guys aren't familiar, whenever you go from renting to home ownership, there's quite a bit of changes that you have to deal with, starting with the amount of things that you have to pay for. Sorry, I'm just gonna bring this desk out because I've been standing for a little too long, and then I kind of got to sit down. But there's quite a few things you have to pay for. So the financial preparation is important. I think this is funny. I beat the desk. I can't go down with the desk. I've tried doing that before and it doesn't work out. Okay. So the different mortgage types that you can get into, it's all depending on your down payment. So what do I mean by that? Is there's two main mortgage types. There's a conventional and FHA. Those are the ones that you're gonna most likely qualify into. There's also a USDA loan program, but those are for more rural areas. Very niche, very specific that you qualify for. Here's the kicker on that. Again, you qualify for these. The main difference between the conventional and FHA are gonna be based on the amount of money you put down. The conventional is a conventional loan. You put down 20% of the down payment of your residence. Actually, no. I think you can put down 3 to 20% of your payment of your mortgage, of the home value. And then if you put less than 20, then you're gonna have to pay private mortgage insurance. FHA are for people with like a little bit lesser credit. That one the minimum is 3.5. FHA is a federal loan, so then that one you're definitely gonna have to put private mortgage insurance because you're definitely gonna be putting less than 20% down for an FHA mortgage. A USDA loan is again for rural areas, comes with a little bit different terms. And so what I was saying, what the kicker was, is a lot of lenders might not let you know that you may be qualified for a USDA loan, but if you come talk to us and you tell us like what area you're gonna look for your house in, then maybe our counselors could let you know if you qualify for a USDA loan. It just depends on the lender that's giving them out there for you. There's also a VA loan. VAs are for veteran only. I don't know if veteran family members, I'm not quite sure how that works. I'm a veteran myself, so I use the VA loan, but I never had my family members apply for it because they're family members. So not quite sure how that works. I doubt it goes to family members. I'm pretty sure it only goes to the service member. There's also fixed rate mortgages, which again, you're gonna lock in your interest rate. They're gonna give you, whenever you're getting down to closing, they're gonna give you a document that says to lock in your interest rate. Sometimes you could buy down a couple points. Hold on, let me get this little guy up here. He's been wanting to come up here. Everybody say hi to Sosa. Sosa's been just sleeping. We were dodging the tornado today. Anyways, so then there's fixed rates, which is what you want to get, what you want to have, because you want your rate to stay steady throughout the whole entire duration of the mortgage, which is usually 30 years. You don't want an adjustable rate mortgage because those rates change after a certain period of time. It could be 3 years, it could be 5 years, it could be 10 years. Again, it just depends on the lender, but you don't want to be stuck on a mortgage where your rate could change, because then you don't know what your payments for it, which it makes it harder to budget for. Okay, so then pre-qualification and pre-approval, there's different things. You only get a pre-approval if you pre-qualify. Things that you're gonna have to get in order for your lender, and then also if you come talk to our counselors in regards to this, these are probably documents that they're gonna ask you for as well, just so they can review your finances. Again, last week we talked about financial readiness, and these are the documents our counselors are gonna ask to assess your financial readiness to purchase a home. They're gonna be, regular things such as your W-2s to make sure that your income is there, because they're gonna go based off your income. They're also gonna go based off your gross income, which is a little tricky. We're gonna help you navigate those waters, because then it's gonna give you a false sense of not approval, but it's gonna give you a false sense of finance, because if you don't understand the difference between gross and net, and then you think what you're getting approved for the most is using your gross amount, and then you go in there going a little bit overboard, then you might get stuck with a house that you're barely going to be able to afford, because they go based off of gross amounts, not net amounts. So you got to keep that in mind. Again, our counselors will help you identify the difference and understand it, because if you don't know what your net from your gross is, that's a little bit worrisome. But don't worry, our counselors are here to help you navigate that. W-2s, pay stubs, bank statements, and credit card statements. Also, anything that you have on loan. If you remember, we talked about last week, we got to figure out how much your debt to income ratio is, and if you can improve it, also it'll help you with your credit score. But any statement that you have, any payments that you're making to debt, you should also consider that, because they're definitely going to consider that. Is meaning by the banks, the lending institutions. So once you have all those documents and you're ready to go get your pre-approval, so that way you can know exactly, well, not exactly, but you can have an idea of how much you could qualify for. Now it's time to shop for lenders. What that means is comparing interest rates, lender fees, any down payment assistance. Okay, 2 things on the down payment assistance. It's good to shop for lenders because they might have some promotions, like let's say it's your mortgage and this is your bank, and you've been with the bank, and they just have a promotion where they'll give you, like a quick example, when I was a bank teller working for TCF, I think they were giving them 2.5% of your mortgage price as credits for if you went and you got a mortgage with TCF. 2.5% is not a bad amount. 2.5% is usually the a realtor fee. That's how much they're going to charge you. So you already are saving yourself the realtor fee. Is if you went and did a mortgage with TCF. So that's just an example. It's okay to shop around. I don't know if you guys are familiar, but when they tell you that when you're gonna go shop around with cars, because they're gonna run your credit. So if they're gonna run your credit, you might as well shop around for cars within the same week and go to different dealerships. The word just fell out of my head. And go to different dealerships within that time frame. So it's kind of the same thing here. Once you get ready and you're gonna be serious about getting pre-approved, then go get pre-approved on one bank, see how much they pre-approve you for, and ask if they have any promotions. You already know some of the names of the big banks: Chase, Bank of America, Wells Fargo. I could go down the list. Huntington was my previous employer. I don't know if they have any promotional or any promotions on home mortgages, but that's the point. You have to shop around. Don't go with the first one, because they might give you some credits for going in. They might have some promotions. They might give you 2%, 1% of your loan amount, which still helps. You might think 1% is a little bit, but 1% is 1% of your loan amount. So let's say, for example, you're buying a house and it's $200,000. 1% of that is gonna be $2,000. Let me see. 200. Oh, I need a calculator. Let me see. 200,000 times 0.01. 2,000. Yeah. See. So that's $2,000 going towards your debt, and your debt is going to include housing, closing costs. So the $2,000 could go towards closing costs. It could go, like I said, 2.5% is your lender fee or your realtor fee. You might not notice it because it's going to be included on this closing cost. So this will take care of that. So 1% does go a big amount. So keep that in mind. And then last but not least, down payment assistance programs. With that being said, not necessarily just down payment assistance programs, but the state itself is going to have some grants. They usually have some grants going on for home buyers. And the only way you'll know if you qualify for any of those grants is if the lender tells you, or if you come talk to our counselors, because our counselors are very well known and very well versed in this world of grants coming from the government, because we are a not-for-profit agency. So a lot of these government agencies that work with us, like the Illinois Housing Authority, is a good partner with ours. So they let us know which programs are out there that are giving grants to people that are shopping for homes. So come talk to our counselors, get the knowledge you need to see what kind of grants you qualify for, and that could also help you identify which lender you go with. Because if you go to lenders and they're not bringing up this grant that you qualify for, and our counselors told you, then maybe that's not a good lender for you, because they're clearly not looking out for your best interest. Yeah, I think that's it. That's all I had for you guys today. Understanding that you could shop around for lenders is probably the biggest takeaway that I want to leave you with today, because some lenders out there, not some, to all of the lenders out there, you're just another number. You're just going to be another mortgage in their books. You're going to be another consumer. So you have to go out there with the lender that treats you, that takes care of you the best. You're going to go out there with the lender that may give you a bigger pre-approval, or may give you, they have a promotion where if you close within the next 60 days, they'll give you 3% off your loan. So definitely is important to shop around. Just as you would be shopping around for a car, you should definitely shop around for a lender, because the lenders could go a long way. Also, interest rates. One lender might give you, I'm not quite sure let me see what the average mortgage interest rate is right now. Average mortgage rate today. Yeah, see, I knew it was like about 6.5. It says it's approximately 6.79, 6.28, which is like 6.75, 6.30. So there might be some banks that'll give you 6.5. Other banks will give you 6.45. Other banks will give you 6.55. definitely keep that in mind. Always, always, always shop around, because usually the first option is not the best option, but it might be the best option. However, you won't know it's the best option if you don't have any other options to compare it to. Bars. Mic drop. With that being said, have a great rest of your week. It is Tuesday, the 11th. It's 80 degrees outside after this crazy morning. It ruined my afternoon lunch because I had to go out there and it was raining and I had to go buy a sandwich and I had to get wet because I won. Anyways, with that being said, take care of yourself. Take care of your finances. If you need any help, come talk to us because we'll help you for free. And that's about it. Hope to see you guys at any of these outreach events. If you do want to see us at any outreach events and you want to make it to some of them, make sure you comment on the link. If you see this video come across your page, like it, subscribe on YouTube, share it on Facebook, and that's all. Have a great rest of your day. See everybody en español on Thursday. Adios.